This morning, everybody woke up to basically the entire world crashing down around them. Not literally, but I mean, the stock market was taking a big everything, not even just the stock market, like every market everywhere was taking a huge hit this morning. Panic selling that we've seen time and time again. But I just kind of wanted to look into what exactly happened because it almost seemed like it came out of nowhere. But as we'll see from at least this one article, it kind of, I mean, obviously they won't touch on everything that happened, but it was almost kind of like this perfect storm, if you will. Like one thing led into another, and just all of that kind of the capitulation really is what it was. Is this the end of the drop? I don't know. I mean, everything seemed to have rebounded pretty well, all things considered. I guess we're just gonna have to see throughout the week, but yeah, let's just get into this article from U.S. News. It says reason to panic: the global stock market plunge explained. Stocks sold off worldwide, and investors are scrambling for the reasons, and there are plenty of them. Yeah, true. I'm not even sure that this article really touches on all of them, but it does touch on some. It just says what happened. The selling began Friday as labor market data for July came in well below expectations, with 114,000 jobs added instead of the 175,000 or so that had been forecast. Add in some less than positive earnings news from tech giants Amazon and Intel, and the bonhomie that developed the following Federal Reserve more or less confirming its September cut and interest rates evaporated. For people who don't know, they've been talking about cutting the interest rates in September, just trying to combat inflation. And so that people are, I mean, this is definitely one of the reasons why it sold off is that people were just kind of selling because they weren't thinking that it was going to go any higher in September because of the interest rate cuts. But I mean, this, as we'll get into, see here, I mean, this news, I mean, it's not great, but it wouldn't cause any significant selling like that. And it says right here, I forgot to highlight it, but even Warren Buffett, the Oracle of Omaha, who many investors follow as a barometer of what to do with their stock portfolios, sold off about half of his Berkshire Hathaway's holding in Apple. Investors wondered, what does Buffett know that we don't? I mean, to be real, I mean, even just from the outside looking in, if you're not somebody who really knows a lot about the markets, you can see that the entire market has basically been propped up with AI. I mean, if it wasn't for Nvidia and just everything just kind of booming with AI, there's just no way the S&P, the Dow, and every Nasdaq would be up as high as they are. It was really just all of these companies kind of propping it up. I mean, if you really look into it, that's pretty much the only reason because there was nothing else really making any significant moves. It's really been AI, an AI bubble. So this, in a way, as they'll get into it later in the article, it almost seems kind of like a correction, just because there was just so many people just buying, 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 thinking it was going higher. And so, in typical market fashion, it just kind of corrected itself to stop everybody out who was in too high. Because you already know that Buffett, of what he sold, I'm sure he bought up some more of something because man's a legend. But anyway, this is a backdrop to all of the selling was action by the Bank of Japan last week to raise interest rates by 25 basis points, a seemingly small step, but one that reversed 2 decades of interest rates at or below zero. During the period when interest rates in the US rose sharply, large investors borrowed cheap money in Japan and invested in the US stocks. By some accounts, there were trillions in dollars involved, and in the unwinding of this carry trade shook financial markets. On Monday, Japan's Nikkei stock market suffered its worst one-day drop since October 1987's Black Monday, an unexpected global stock market crash. Yeah, I mean this, like I said, this wasn't even just the US market. It was like everywhere. Just everything just poof just fell. I mean, cuz I was watching the market, I was watching crypto as well. Crypto just fell off a freaking cliff this morning too. Like watching Bitcoin fall from 70 to 49,000 in just a week has been insane to watch. Just the amount of just everything just falling at once. It was just crazy. Says this morning, market volatility reached its highest level since the onset of the COVID-19 pandemic, highlighting an intensified global sell-off, said Gregory Daco, EY chief economist. However, the market panic appears disproportionate. In our opinion, the core issue lies with the Fed being behind the curve in action and in thought rather than in a significant economic downturn. I mean, I would agree. I mean, obviously, the U.S. and the Federal Reserve have been not great at what they've been doing lately. It's just been so back and forth with like interest rates cuts. No, we're not going to cut them. Yeah, we're going to cut them. No, we're not going to cut them. It's been just this back and forth forever. And then when you ask them what they're going to do to kind of remedy this absolutely horrific debt that we're in now here, well, clearly their idea is just to print more money. I mean, they won't say that, but I mean that's what they're trying to do. I mean, you just look at how much more money is being printed, and then especially with getting rid of the gold standard, that pretty much just solidified that. I mean, it's been a long time coming, and I think really with inflation, it's obviously only going to get worse because we're just going to keep printing money, which isn't going to help this at all either, because the more money you print, the less valuable it becomes. But clearly, people don't think like that anymore. Then this is where it gets into the market correction, which I kind of agree with. I mean, it's like I said, it was just propped up so much by AI that it was bound to come back down at some time. This is possibly corrections of 10% or even a bear market are common events, obviously, and it has been 4 years since the 2020 market crash that occurred as a result of COVID-19. The stock market had been riding high on a few stocks, notably the Magnificent Seven tech stocks that driven most of the gains in recent months. This was a bet on the transformative power of artificial intelligence to change the economy. Investors may have just gotten ahead of themselves. Man, I can't read right now. And this is what I mean. I mean, look at Nvidia. Like, if you look at the past 2 years of Nvidia, this is back before the split. It went from like around maybe $200 to up to like $1,200. Just an insane move. I think it was below 200 when it started. Like, with AI and just the power of AI that has come out, it just boomed Nvidia. It was crazy the amount of just gains people had if they bought in low. Like, I can't imagine having gotten in on that curve, if you will, back before the rise of AI and just AI everywhere. Man, what a steal if you got in before that, man. You would have made so much money. It says, to be sure, valuation concerns were magnified by a thus far mixed earnings season, as massive AI spending by large cap technology companies caused investors to question the potential payoff. Investor sentiment was also great given the uncertain domestic political situation, as well as increasingly troubling geopolitical developments. True. Lynch added, we believe Friday's jobs reports and ensuing market sell-off was a perfect storm of volatility for the start of a seasonally weak dog days of summer. We're not convinced that a miss of 60,000 jobs portends an imminent disaster for the U.S. economy. And yeah, I mean, anybody who thought it was just that earnings, or not earnings, but that report for the jobs, I mean, it's obvious that wasn't the only reason. It was just kind of interesting to see how all of that, it was the news report and then Japan's news and then just the rest of the market selling, which then led crypto to sell, which I think just kind of all fed into each other, really, if you think about it, into what exactly happened this morning. Because yeah, it kind of blew me away, like how much everything had just sold off. It's kind of interesting to watch it in action too, because I have charts that I watch every morning, and just seeing how everything just kind of fell all at once was really kind of spectacular in its own way. Not probably in a good way, but I mean in its own way, just interesting to watch that all unfold in real time as you just see just poof, just everything drop. And then it says, what about politics? And so on Monday, former President Donald Trump blamed the market's descent on the prospect of Vice President Kamala Harris. There's Trump. Oh man, Trump's hilarious. Gaining control of the White House. Trump repeatedly claimed that his economic policies were responsible for the stock market's strong performance during his term, except when it crashed during COVID. And in recent weeks, a Trump trade developed on Wall Street as investors bid up crypto, energy, and other stocks they thought would do well with Trump back in office. And I mean, obviously, that makes sense because if you saw his what was that, the RNC, sorry, I couldn't think of it, the RNC after he was shot at, I mean, that was like his big thing, was like closing the border, getting America back on track, and then drill, baby, drill is what he said. Which, I mean, I agree with, to be honest. Like, we really need to get everything back into the US and stop outsourcing it. I mean, obviously it's good to outsource, but I mean, there's definitely things that we can do here in America. And I think the whole trying to turn away from the drilling aspect and just pumping fuel, really, and just totally shifting towards electric vehicles. I mean, I'm not against electric vehicles, but I think trying to just completely ban the use of gas vehicles is not the play. And so, yeah, like I said, this definitely probably played a factor in it too. There was obviously crypto had risen a lot after his, not the RNC, but he spoke at Bitcoin and saying that he supports crypto. And so there was that, and then just kind of maybe people selling those positions that they had bought, as well as everything else, kind of led to the capitulation that we saw today. And I'm sure there was other events, I'm not sure, but let me know in the comments if you guys found anything else that maybe led to this, because it's interesting to see how all of this kind of just fed together into what was just a really red, bloody morning for lack of a better term. I mean, if you looked at the spreadsheet that they had of all the stocks, everything was red besides like maybe one. It was so bad. But anyway, if you guys liked the video, make sure to leave a like, and I hope to see you guys around. Peace.